General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's do the work. Today's Thursday the 16th. I'm trying to fix this. I think that's wrong. Framework expansion, daily stance, sidelines, confidence level low. It just didn't look like a good price action. The anchor point confirmed, no. Today expectation for the anchor point for the week is all over the place with the SMT. Is expansion playing out? Yes. And the determinants hit today? No. So you can see on the chart. Yeah. Okay, so we broke this low and chopped AM session. Closed low. Closed below Monday, so it's Tuesday low. It's not holding it. Wednesday is the high on NASDAQ. So NASDAQ so we could just fail overnight. Even with good earnings from ASML and TSM. It wasn't perfect earnings, so and it went up I think like 70% before earnings. So profit taking took place as well. H1. It's just real wicky, but you gotta think summertime. So week 3, week 2, you can see how I kind of started this off. We're just building value, prices staying in tight ranges. Contact has been made with the propulsion block with respect to the level. Nobody closes inside, but we can still just flush hard Friday. No level of support is holding so far. And when we hit fair value, I expect to see strong wicks like how we bought up before. It's the daily, nice body closure. Respecting EQ of May, previous month. It's definitely bearish in the charts. We have to see some real institutions step in to see any kind of bounce. Now, SPAs. Got the high today. So, it would have been Wednesday, maybe reversal, but we swept it again. Kind of chopped in the same area, right around this new week opening gap, and we closed below. Still kind of hanging around EQ, still kind of in premium. Previous week's high gave that reversal. Reversal was textbook. Okay. So this right here is a mess. This wick because wicks are imbalances. We chopped and it's just delivering to this wick pretty much. We kind of closed out of it now. Just this upper wick here from CPI. It's been chopping us. It's been chopping the same value area as yesterday. SPX 500. And we got the reversal candle because we swept the high close below the low. I don't trust the sales on SPX because it has more breadth. Yeah, that's true. A lot of people are buying regardless of you think NASDAQ and anything. Still going up here. SPY. We got a doji. We don't got the reversal candle set up. We kind of got rebalance because it's basically a volume balance anyway. Just basically rebalancing that while still kind of respecting this whole daily order block from a minute ago. Doji, not a reversal candle on the stock chart, so this is non-directional. It's a little bit more directional. Got the solid close below, respect the previous week's low and May EQ. Previous week's low held the support. We go on NVIDIA. More of a retracement day, kind of hanged out inside this week. We didn't take the high or the low. No trade day. Let's outline the correct stance. Seek and destroy week. We're non-directional. Will I need to be true to engage? We gotta get out this chop. We did price deliver that adds to experience more context in markets that moved outside the indices. Seeing nice runs in Forex and gold. Gold is something I'm actually thinking about looking at every day just because it is moving. And it'll be more directional sometimes. If then for the next similar day, noticing these chop areas on the chart ain't avoiding them. Smart. Alright, did the framework play out? No. What did I learn about pattern narrative myself? Summer PA. This is why the bankers take this time of the year off. And who will I watch for tomorrow? Consumer sentiment. Alright, that's that on that. Have a good day. Peace.